Imagine paying off your mortgage, finally owning your home free and clear, and then realizing you still have to pay rent to the government until the day you die. That is the nightmare of property taxes. But while everyone was distracted by inflation last year, 5 specific states quietly flipped the switch. They didn't just lower property taxes for seniors. They didn't just cap them. They passed laws to eliminate them entirely. We are talking about a $0 tax bill. But here is the problem. Most retirees have no idea these programs exist, and if you miss the filing deadline, you get nothing. Subscribe to Tax Hack Pro, and if you want to protect your retirement, you need to know this list. Property taxes are the silent retirement killer. The average senior pays $3,600 a year. And unlike income taxes, they never stop. You could live to 105 and you'd still owe. But in 2023, 2024, and 2025, 5 states said enough. They passed new laws, expanded existing programs, and created pathways to zero that didn't exist 3 years ago. Some of these programs have enrollment deadlines, some have limited funding, and all of them require you to apply. The savings don't come automatically. So if you're a senior, or you have parents approaching retirement, or you're planning where to spend your golden years, this video could save you tens of thousands of dollars. I'm counting down the 5 states that just made property taxes free for seniors. What changed, who qualifies, and exactly how to claim your exemption before it's too late. Number 5 starts right now. Number 5, Nebraska. The Cornhusker State. Endless fields under endless sky. Small towns where the high school football team is the biggest thing going, and neighbors still bring casseroles when someone's sick. This is America's heartland, where families have farmed the same land for generations. And for years, those families watched property taxes push seniors off land they'd worked their entire lives. Nebraska had a problem. Seniors were fleeing to Wyoming, to South Dakota, anywhere property taxes weren't eating their fixed incomes alive. The property tax revolt had been brewing for years. Then in 2024, Governor Jim Pillen made property tax relief the centerpiece of his agenda. LB 143 passed and everything changed. Here's what Nebraska created. If you're 65 or older and your household income is under $100,000, you now qualify for the Nebraska Property Tax Credit Program. And here's the key word, refund. The lowest income seniors, those under $45,000 single or $52,000 married, can get up to 100% of their property taxes back. Not reduced on the front end, refunded, as in the state sends you a check. Nebraska's new credit can eliminate your entire property tax bill, but here's what makes it different from every other state. They actually send you a check. You pay your taxes, then Nebraska pays you back. Let me explain how this actually works because it's different from any other state. You pay your property taxes like normal. Your county sends the bill. You write the check. Then, and this is crucial, you file for the property tax credit with the state. Deadline is typically June 30th. Nebraska calculates your credit based on your income, and then they mail you a refund, actual money, back in your account. Why does this matter? Psychology. Most states give you an exemption. Your bill is just lower. You never see the money. Nebraska does something brilliant. You feel the full weight of the tax bill. You pay it and then the state sends you a check for the full amount. You feel the relief. It's not theoretical savings on paper. It's cash in your hand. That's powerful. The refund program is powerful, but Nebraska didn't stop there. In 2024, they passed something even bigger, a constitutional amendment that could eliminate school property taxes entirely, and it's headed to the ballot. Here's the bigger picture. Nebraska already spends more on property tax relief per capita than almost any state in America, but relief programs are band-aids. The underlying taxes still exist, so Nebraska is going further. There's a movement to constitutionally eliminate school property taxes, which make up the majority of most property tax bills. If it passes, seniors wouldn't need credits or refunds. The tax simply wouldn't exist. The political coalition is unusual. Farmers and seniors, rural and suburban, all united against property taxes. Governor Pillen put it bluntly, property taxes are destroying rural Nebraska. A 2026 ballot measure is likely. Nebraska could become the first state to constitutionally ban school property taxes, but that's the future. Nebraska is fighting to eliminate property taxes entirely. But the Senior Credit Program, it's available right now, today. And if you're over 65 with income under $100,000, you might be leaving thousands of dollars on the table every single year. Here's exactly how to claim it. Step 1, verify you're eligible. 65 or older, Nebraska resident, primary residence. Step 2, gather your income documentation, social security statements, pension info, everything. Step 3, file Form PTR. That's property tax relief with your county assessor. Step 4, and this is critical, the deadline is typically June 30th of the year following the tax year. Miss it by one day, you lose the entire credit. Step 5, wait 6 to 8 weeks. Your check arrives in the mail. Let me show you real numbers. Senior couple, both 68. Combined income, $48,000. Property tax bill, $3,200. Under Nebraska's sliding scale, they qualify for approximately 85% credit. That's $2,720 back. Their effective property tax for the year, $480 on a home they own outright. That's the power of this program. If you're learning about programs you didn't know existed, hit subscribe right now. We uncover the financial opportunities everyone else misses every single week. Now, the catches, because there are always catches. You must file every single year. This isn't a one-time application. Income is calculated from all sources. Social Security, pensions, investments, everything. The deadline is strict. Miss June 30th, lose the credit entirely, and it only applies to your primary residence. No vacation homes, no rentals. Nebraska's program requires you to apply every single year. Miss the deadline, you get nothing. But the next state automated their system entirely. Qualify once, file once, and the savings follow you forever. No annual paperwork required. Nebraska just created one of the most generous property tax refund programs in America. But our number 4 state did something even more radical in 2024. They didn't just create a program, they rewrote their constitution, and the changes are already saving Georgia seniors thousands. Number 4, Georgia, the Peach State. Atlanta's ambition meets Savannah's charm. Tech startups and plantation history. A state that's been attracting retirees for decades with its mild winters and low cost of living. But in 2024, Georgia didn't just attract retirees. They rolled out the red carpet and handed them the keys to the castle. November 2024, Georgia voters approved a statewide constitutional amendment that changed everything. The floating homestead exemption sounds technical, but here's what it means in plain English. If you're 62 or older in Georgia, your home's assessed value now freezes forever statewide, no matter what county you live in. It's not a program you apply for annually. It's a constitutional right. Understand what this means. Your home could triple in market value over the next 20 years. Doesn't matter. Your property is taxed at what it was worth when you turned 62. Atlanta real estate exploding. Your assessment doesn't budge. Inflation driving values up statewide. You're locked in. The freeze follows you for life. Subscribe to Tax Hack Pro for more information. The statewide freeze is automatic at 62. But Georgia's real power move is the school tax exemption that wipes out 60 to 70% of your bill. And in 2024, they expanded who qualifies dramatically. Here's the math most people don't understand. In most Georgia counties, school taxes make up 60 to 70% of your entire property tax bill. The county portion may be 20%, city 10%, school is the monster, and Georgia has been exempting seniors from school taxes for years. But here's what changed in 2024. The income limits that determine who qualifies got blown wide open. Look at these numbers. Fulton County, that's Atlanta, exempts seniors 65 and older with income under $97,264 from school taxes. $97,000, that's not a low-income program. That covers the vast majority of retirees. Cobb County, no income limit at all. Turn 62, you're exempt. Cherokee County exempts you from school and county taxes. Each county is competing to attract seniors, and they're competing hard. School tax exemption at 62, assessment freeze for life. But here's what nobody talks about. Georgia also doesn't tax most of your retirement income. Stack these together and the math becomes almost unbelievable. Let me show you the full Georgia stack. Property taxes assessment frozen at 62. School taxes eliminated. That's handled. Now, income taxes, Social Security completely exempt. Pensions completely exempt. Other retirement income like $401,000 or IRA withdrawals exempt up to $65,000 per person. And once you hit 65, you get an additional $65,000 exclusion. A married couple over 65 can have over $130,000 in retirement income and pay zero Georgia state income tax. Let me make this real. Retired couple, both 66, combined retirement income $120,000. In their previous state, let's say New Jersey, they paid about $4,000 in state income tax and $9,500 in property taxes, $13,500 a year to the state. They moved to Georgia. Income tax zero. They're under the exclusion. Property tax on their $300,000 home after the school tax exemption, about $800. Total Georgia taxes, $800. Annual savings, $12,700 every single year. Georgia's combination of property and income tax exemptions makes it one of the most tax-efficient states in America for retirees. But to get the full benefit, you have to know which forms to file, and there's a deadline that catches thousands of seniors every year. Here's exactly how to claim everything Georgia offers. Step 1. File your homestead exemption application with your county tax commissioner. This is the foundation. Step 2. On that same application, check the box for senior school tax exemption. Step 3. The assessment freeze kicks in automatically once your homestead exemption is filed and you're 62 or older. The critical deadline, April 1st. You must file by April 1st of the year you want the exemption to take effect. Miss it, wait a full year. Turning 62 in March, file immediately. Turning 62 in May, you file the following year by April 1st. The catch is it must be your primary residence, no investment properties. Different counties have different additional exemptions beyond the statewide ones, so check your specific county. And the big one you must file. The exemptions are not automatic. Georgia will happily take your full tax payment if you don't apply. Don't let them. Georgia gives you frozen assessments, eliminated school taxes, and exempt retirement income if you file by April 1st. But the next state just passed something that requires no application at all for part of it. Qualify once and the savings are automatic. Plus, they added a deferral program at 1% interest that lets you pay zero out of pocket forever. Georgia just became the most comprehensive senior tax haven in the South. But our number 3 state shocked everyone in 2024 with a 3-part system, so creative financial advisors are calling it the best-kept secret in retirement planning. And it's somewhere you'd never expect. Number 3, Colorado, the Centennial State, where the Rockies meet the sky and outdoor adventure is a way of life. Denver's boom, Boulder's charm, ski towns that look like postcards. Colorado has always attracted active retirees who want mountains in their backyard, but there was a problem. Home values exploded, and property taxes followed until 2024. Here's what happened. Colorado real estate went insane. Denver metro home values up over 60% since 2019. Mountain towns even worse. A cabin you bought for $200,000 is now worth $600,000. Great for your equity, devastating for your property tax bill. Seniors on fixed incomes watch their taxes double, triple. Something had to give. In 2023, Colorado tried to fix it with Proposition HH, a complicated ballot measure that confused voters and failed. So in 2024, the legislature took a different approach. They passed targeted senior relief that was simple, powerful, and immediate. The senior property tax exemption got a massive expansion. But that was just part 1 of a 3-part system that can take your property taxes all the way to zero. The expanded exemption saves hundreds, maybe over $1,000 depending on your county. But Colorado's real genius is what they did next. They combined the exemption with a deferral program at 1% interest and a circuit breaker that can actually pay you money back. Together, they create a path to zero. Part 1, the senior property tax exemption. If you're 65 or older, or a surviving spouse 58 or older, and you've lived in Colorado for at least 10 consecutive years, you qualify. The exemption, 50% of the first $200,000 of your home's actual value. That means up to $100,000 is removed from your taxable value. On a $400,000 home, you're only taxed on $300,000. The savings depend on your county's rate, but we're talking $500 to $1,200 or more in high-tax areas. The exemption reduces your bill, but here's where Colorado gets creative. What if you don't want to pay the reduced bill either? Colorado's senior property tax deferral lets you defer what's left at just 1% interest. And in 2024, they removed all income limits. Part 2, the senior property tax deferral. And this is the game changer. If you're 65 or older, you can defer your entire property tax bill indefinitely. The taxes become a lien on your property settled when you sell or pass away. The interest rate 1% simple interest, not compound. 1%. Previous deferral programs around the country charge 6, 7, 8% interest, not worth it. Colorado charges 1. That changes everything. Let me show you why 1% interest changes the calculation. Say your property taxes are $5,000 a year after the exemption. You defer for 20 years. You'd owe a $100,000 in deferred taxes plus about $10,000 in interest at 1%. Total lien roughly $110,000. But your home, which appreciated while you weren't paying, probably gained $200,000 or more in value. You come out $90,000 ahead. You paid zero property taxes for 2 decades and still profited. That's not a burden, that's a strategy. exemption reduces your bill, deferral lets you pay nothing. But Colorado added a third piece that might actually put money in your pocket, the property tax circuit breaker. And for low-income seniors, it can pay you more than you owe. Part 3, the property tax, rent and heat credit, called the PTC. This is Colorado's circuit breaker. If you're 65 or older with income under about $18,000 single or $24,000 married, yes, that's low, but many seniors on Social Security alone qualify. You can claim a credit of up to $1,044. Here's the key. You can claim this on top of the senior exemption. So you take the exemption, your bill drops, you pay the reduced bill, then you claim the PTC, and Colorado sends you money back. If the credit exceeds what you paid, Colorado literally pays you. Real scenario. A 70-year-old senior living on $16,000 a year in Social Security, home worth $250,000. Property tax before exemption about $1,275. After the 50% exemption, $638. They pay that. Then they claim the PTC credit $800 back. Net result, Colorado pays them $162. They don't pay property taxes. The state pays them. The system actually generates income for the lowest income seniors. The circuit breaker helps low-income seniors. But what about retirees in expensive mountain towns? Breckenridge, Vail, Aspen, where homes cost $1 million and property taxes are crushing. Colorado system works there too. Here's the strategy. Take the exemption. Saves $500 to $1,000. Defer everything else at 1%. Pay nothing out of pocket. When you sell in 20 years, your $1 million condo is worth $1.8 million. You pay off the lien and walk away with more than if you'd paid taxes all along. Colorado system works at every price point. Colorado's three-part system: exemption, deferral, circuit breaker. Lets any senior reach zero if they know the playbook. But our number 2 state decided complexity was the problem. They passed the simplest law in America. If you're over 65 with income under $40,000, your property taxes are eliminated. Period. And they have no state income tax either. The Mount Rushmore state, presidential faces carved into ancient granite, badlands that look like another planet, prairie that goes on forever, Sturgis thunder, Deadwood history. South Dakota has always been America's freedom state, fiercely independent, deeply skeptical of government, allergic to taxes. And in 2024, they took that philosophy to its logical conclusion. South Dakota's tax reputation is legendary. No state income tax ever. No inheritance tax, no estate tax. It's been a haven for retirees and trust funds for decades, but there was one tax they couldn't escape: property taxes, until Governor Noem and the legislature decided to finish the job. In 2024, South Dakota expanded their senior property tax exemption into something remarkable: full elimination for qualifying seniors. Here's what South Dakota passed. If you're 65 or older with household income under $32,000 single or $40,000 married, your property taxes are eliminated. Not reduced, not capped, not deferred, eliminated. Zero. And here's what changed in 2024. They removed the home value limit. Previously, expensive homes didn't qualify. Now, any home qualifies if you meet the income threshold. Live in a $500,000 house on $40,000 a year. Zero property taxes. Zero property taxes for seniors under $40,000 income. But here's what makes South Dakota different from every other state on this list. They also have no state income tax. So that $40,000 threshold, it stretches further than anywhere else in America. Let's compare. You're a senior with $40,000 in retirement income. In California, you pay about $800 in state income tax and $4,000 in property taxes. You keep $35,200. In Minnesota, it's worse. $1,400 income tax, $35,000 property tax. You keep $35,100. In South Dakota, zero income tax, zero property taxes. Under the exemption, you keep the full $40,000. That's a $5,000 difference every single year for doing nothing except living in the right state. But here's what really sets South Dakota apart: how they calculate income. Social Security is only 50% counted. Let me say that again. If your Social Security is $24,000 a year, only $12,000 counts toward the income limit. Pension and other retirement income full count. But that Social Security discount is huge. A couple with $36,000 in Social Security and $15,000 in pension has actual income of $51,000, but only $33,000 counts toward the $40,000 limit. They qualify for zero property taxes despite having over $50,000 in real income. The income calculation means couples with over $50,000 in real income can qualify for zero property taxes. But even if you make too much for full elimination, South Dakota has a fallback that still freezes your taxes forever. South Dakota's property tax freeze program catches everyone else. If you're 65 or older with income under 47,000 single or 58,000 married, higher limits than the elimination program, your property taxes freeze. And not just your assessment, the actual levy rate freezes too. Your taxes are locked at today's level for life. Even if property values double, even if tax rates rise, you pay what you paid the day you qualified forever. Watch how the freeze works over time. Year 1, you pay $1,500. Your neighbor without the freeze pays the same. Year 10, inflation and rising values have pushed your neighbor to 21,000. You still pay $1,500. Year 20, your neighbor pays $3,000. You still pay $1,500. Over 20 years, you've saved $15,000 or more, not from a special program, just from the freeze locking in your rate while everyone else has climbed. And that's if you don't qualify for full elimination. South Dakota offers complete elimination for low-income seniors and a permanent freeze for everyone else. But to get either benefit, you have to apply, and the deadline catches thousands of people every year. Here's how to claim. Contact your county director of equalization. That's South Dakota's term for the assessor's office. File either the property tax exemption application for full elimination or the assessment freeze application. You'll need age verification, income documentation, and proof of residency. The deadline, April 1st of the tax year, not April 15th like income taxes. April 1st. Miss it by 1 day and you wait an entire year. Turn 65 in February, apply immediately. Turn 65 in June, you can't apply until the following year. Know your dates. South Dakota's message is simple. Move here, retire here, and if your income is modest, you'll never pay state taxes again. Not income, not property, nothing. South Dakota created the simplest path to zero property taxes in America. No income tax, no property tax, total freedom. But our number one state is doing something no other state has ever attempted. They're using an $11 billion oil fund to eliminate property taxes for seniors automatically. No income limits, no applications, no catches, and they're building it to last forever. Number 1, North Dakota, the Peace Garden state. Quiet, unassuming, easy to overlook on a map. But beneath the wheat fields and prairie grass, something extraordinary happened. Oil, billions of barrels in the Bakken Formation. And North Dakota did something no other state has ever done. They saved it. $1.5 billion sitting in something called the Legacy Fund. And now they're using that money to do what every other state only dreams about. Eliminate property taxes for seniors forever. The Legacy Fund. $11.5 billion, all from oil and gas taxes over the past decade. And here's what makes it brilliant. They didn't spend it, they invested it. The fund earns over $600 million every 2-year budget cycle. And that number keeps growing as the fund grows. Governor Kelly Armstrong looked at that money and asked a simple question. What if we used it to eliminate property taxes for the people who built this state? His answer, the Path to Zero initiative. Here's what North Dakota passed in 2025. The primary residence credit for seniors 65 and older doubled from $500 to $1,000. On top of that, every household gets $550 in Legacy Fund property tax relief. Combined senior relief right now, $1,550. But here's the trajectory that matters. As the Legacy Fund grows, the relief increases. By 2027 to 2029, projections show senior relief exceeding $2,000, which for the average North Dakota senior covers their entire property tax bill. $1,500 in relief now, $2,000 or more within 3 years. But here's what makes North Dakota completely different from every other state on this list. They're designing the system to make property taxes disappear automatically. No annual applications, no income limits, no hoops. This is the genius of North Dakota's approach. The Legacy Fund earns investment returns. Those returns fund property tax relief. As the fund grows, and it grows every year from continued oil revenue plus investment gains, the relief allocation grows. Eventually, and we're talking within this decade, the earnings fully replace property taxes for seniors. The general fund cost drops to zero. It's self-sustaining. No new taxes required. The oil wealth that North Dakotans built becomes a permanent property tax elimination machine. In 2024, voters rejected a property tax elimination measure 70-30. Why? It had no funding mechanism. It was a wish, not a plan. The 2025 approach is different. It uses Legacy Fund earnings. Money that already exists, already grows, requires no new taxes. That's why it passed. It's not a promise. It's a bank account. North Dakota is building a system where oil wealth eliminates property taxes forever. But what do you need to do right now to claim the current relief? Less than you'd think. Here's all you do. File the homestead credit application with your county. It's a one-time filing. Once you're in the system as a senior homeowner, the credits flow automatically. The legacy fund relief is automatic for all homeowners. You don't even need to apply for that part. File once and the savings come to you every year, growing every year until your property taxes hit zero. Closing 5 states, 5 revolutions. Nebraska sends you a refund check up to 100% of your property taxes back. Georgia freezes your assessment at 62 and eliminates school taxes that make up 70% of your bill. One-time filing, savings for life. Colorado combines a 50% exemption, 1% deferral, and a circuit breaker that can actually pay you money. South Dakota eliminated property taxes entirely for seniors under $40,000 in a state that already has no income tax. And North Dakota is using $11 billion in oil wealth to build a self-sustaining system that will eliminate property taxes for seniors automatically forever with no new taxes required. These programs are new. Most passed in 2024 or expanded in 2025. Deadlines exist April 1st in South Dakota, June 30th in Nebraska, April 1st in Georgia. There's money being left on the table right now by seniors who don't know these programs exist. If you live in one of these states, check your eligibility today. If you're planning retirement, these 5 states just jump to the top of the list. If this video showed you something you didn't know existed, hit subscribe. We cover the financial moves that actually matter every single week. Drop a comment, which state surprised you most, and share this with someone who needs to see it. A parent, a grandparent, a friend planning retirement. These 5 states just rewrote the rules. Make sure the people you care about know before the deadlines pass. I'll see you in the next one.